Tonight, we'll be unpacking 4 things that new property buyers should know about building insurance. Douglas, I think the key question is, what is the difference between sectional title and private home insurance?
That's a good starting point because it talks to the ownership of a building, okay? And if you think of sectional title development, the exterior of the building all forms part of the common property, okay? And that's why you'll see sectional title developments, and they're very popular in South Africa. They all look the same, they have the same general layout, and they're usually painted the same color with the same type of roofs. The reason is that the ownership thereof all forms part of the common property, and in a similar way, the costs relating to that property, be it maintenance as well as insurance, then all form part of a single cost item and are shared not equally, but are shared between the unit owners as part of the body corporate. So what would happen is that the insurance for a body corporate would be taken out on one policy. So every unit owner wouldn't have their own building insurance policy. On the other hand, you get private home insurance, and that's if you think about your normal house in a normal suburb, freestanding homes, there each owner has to take out his own insurance, okay? And each owner is responsible for the building himself, and he has to then take out his own insurance. And it's one that's it kind of crosses both legs, is full title stands in a residential development. So some of these larger residential developments provide for full title stands. So each owner owns his own property, pays his own rates and taxes, and builds his own house according to his preference, but the security and the infrastructure is shared. And in that case, the owner would still take out a building insurance policy for his own building, but the homeowners association would take out an insurance policy to cover the walls and the roads and maybe the tennis courts and that type.
Douglas, now that we know the difference between sectional title insurance and private home insurance, as a seasoned property investor, I can tell you now, I always get blindsided, or most of the time get blindsided on what's supposed to be covered and what's not supposed to be covered. So could you please take us through what's supposed to be covered in building insurance, what's not supposed to be covered, and why?
Things like your stove, your swimming pool, your walls, your roof. If you install trellis doors, or even if you install blinds, often you'll have, especially the blinds that are screwed into the walls, shelving, kitchen cupboards, all of these things. If you had a lovely big built-in cupboards with desks and bookshelves and all of that, that would form part of the building. If, however, it was something that you could take with you when you move, that then is considered as contents. So I think now we've got this building, so what's covered? So generally, sudden and unforeseen damage to this building. So that would be things like a fire or a flood or a hailstorm, or unfortunately, as we now more and more see, is trucks or cars driving through people's lounge windows on a Sunday evening or on a Friday evening. So those are the type of things that building insurance is really designed to cover. And then there's also there's the main these key perils, and then you get also cover for things like a geyser and power surge and loss of rent. You know, if you're renting out your property, you would include loss of rent cover to cover you in the event that your house burned down and your tenant moved out, or you had to refund your tenant or something like that. What's not covered in terms of a building insurance policy, obviously, is things that are not attached to the building. I might as well just touch on a few of the standard type of exclusions in a typical building insurance product, and it's really, I think if you understand the main categories of exclusion, then it becomes very easy to understand whether an event will be a claim or not. I think the first point is a building insurance contract is not a maintenance contract. So it won't cover you for things that are supposed to be part of the maintenance. For example, your roof needs to get painted, the waterproofing needs to get resealed. If you don't do it, and after a number of years, your roof starts rusting or develops little holes in it, that won't form part of an insurance claim. However, if your roof is in good repair and it gets knocked by hailstones and it gets big dents that crack the paint, that would be covered. So damage that happens over time is also not. Also, you get items in your house that have a useful life. Think of your carpets. And, I can picture them in my mind because many carpets, as you walk over them more and more and more, they just wear down. And after a while, you've just got holes. And obviously, a carpet like that wouldn't, replacing that carpet is an ownership expense. You have to, as a property owner, carry that cost, but you can't claim for that from your insurance. A third one that's also quite important and often misunderstood, but is an exclusion regarding defective workmanship. Okay, and the key here is that obviously building regulations have been enacted and they're in law, and insurance policies are written on the basis that if you've built a building, you've complied with all the necessary laws and standards that one would expect. And so you do get cases where a builder or someone would take a chance or not build a thing correctly, not follow the instructions, use inferior materials, and that could cause damage. And that, unfortunately, is also not covered because the recourse in that situation is against the builder who took the chances.
That's all we have time for this evening. Douglas, thank you very much for joining us.